Hello and welcome to Capital Market. I am Bisi Adebayo. The Nigerian debt capital market this week received the revised bond auction calendar for the fourth quarter of the year from the Debt Management Office. The report indicates an offering of 15 billion naira each for 15-year and 25-year respectively. Well, this was a reduced offering compared to previous offers. But what does this mean for the capital market players? The deputy head of investments at ICO Pensions, Tony Odutola, joins us now for a broad analysis of this development and more. Good evening, Mr. Odutola. Thank you for joining us on the program. Now, the DMO released the bond circular for the fourth quarter of 2020 to offer 15 billion naira each for the 15-year and 25-year bonds, respectively. Tell us now, what do you make of the reduced bond offering by the DMO as reflected in Q4 calendar, and how do you even think that would affect participation?
Thank you very much for having me. The calendar by the DM really was actually for the month of October. I mean, they were supposed to release for the quarter, but what we have is for the month. And that just signals to show that the desire of the DM is to keep the market guessing and as best as possible try and force rates down. But what is to be made of it is if we go back to what's expected to be sold throughout the year by the DMO, the target is about 1.6 trillion. The revised plan that they have to raise funds from the market. That will include the foreign borrowings that have been converted to local borrowings. And if you take from the beginning of the year up to now, about 1.5 trillion, a little over 1.5 trillion has already been mobbed from the market. So it may be expected that reduced offerings will come to the market. And so it's probably in line with the plan that they have. Because, I mean, from my calculations, probably less than 100 billion that is left to be raised between the end of the year.
Now, with inflation on the rise, hitting 13.71% in September, and with yields in the fixed income space at abysmal levels, what other instruments are PFAs like you looking at?
Instruments that are permissible under the investment guideline of PENCOM will be where the community would look at, and those instruments would be alternative instruments, equities maybe. So when I say alternative instruments, I would mean mutual funds maybe, private equity investments maybe, infrastructure funds, to name a few. So those would be other areas where there would be additional, searchlight by the PFA community in terms of being able to get better returns on investment. But of course, you can see there will be riskier assets. And of course, you will expect that at the rate, at the level of, returns now that you have in the fixed income space, what you then be doing is taking a bit more risk to get better returns.
Now, have you started taking advantage of the favorable yields at the equity market, and tell us how that is going?
Okay. For every PFA, I would expect that there may be some variations depending on what investment policy and strategy each of the PFAs are, adopting. What you would find is that in some cases, you find PFAs who are very much long term. And so what they do in that instance is they just buy shares, equities in this case, and keep. Others will actively trade it. So it depends on the position of each player is. But I would expect that as much as possible, investment into the space will be, geared towards aligning with the investment policy and strategy that was set at the beginning of the year. Albeit you may have some modifications based on what has happened with COVID-19 and the effect of that on the market. But largely, what you would, tend to have is that each of the PFAs will be based on what risk they are able to adopt. So you find PFAs that will be able to do a lot larger, and you find PFAs that will still say, you know what, we will stay within the band that we had set in terms of risk that is possible for us to take. So it may not be a general response, because you find those who have a bit more and then those who have a bit less.
But what about PFA activity in the corporate space now? Although it also seems like the corporates have been more interested in commercial papers lately rather than bonds.
If you take a look at commercial papers, you would be pricing them, a little bit, be benchmarking them against treasury bills. And with treasury bills now moving very near to zero, so you're likely to have, there's not so much to do there anymore. So if you still want to stay in the fixed income space, then you're likely probably going to do a bit more bonds, than the treasury bill. So that would probably explain why you see more activities in the bond space than in the treasury bill space.
Well, with the SEC announcing plans to commence the regulation of virtual and crypto assets transactions by foreign and domestic issuers in the country, is that another instrument that PFAs will possibly invest in? And how was that news actually welcomed by you guys?
To the extent that investments that we carry out in the pension industry is are those that have been approved for investment by PENCOM, I do not see how this news will affect any PFA, because we are under very strict investment guidelines and are governed by a structure that also ensures that the custodian of the assets would be allowing funds to be released based on investment that have been approved. Pre-approved in this case, through the guidelines. These ones that you mentioned do not find them, do not find themselves in that space, and so it would be difficult, for any PFA to go into that space until, of course, we mature enough to, that's setting where this becomes investable assets for us. So for now, there's no effect whatsoever on the PFA community for such assets.
Now, when you look at the primary auction that was held on Wednesday, we saw the central bank sell NT bills worth 124.88 billion naira across the tenors, with stop rates of 1% on 2 tenors and 2% on the third. What was participation like for PFAs?
To be honest, the participation from the pension industry has dropped to as low as possible. Low as possible because, there may be one or two take-ins here. But like I alluded to earlier, what you now have is a situation where the returns from there is near 0, 1, 2% in the max. So it just simply say, would you be comfortable keeping funds, sitting down for one whole year to receive, 1% return? So it's really not so much as what you would expect. We are being paid to generate returns as best as possible, and I'm not sure contributors would like to see us returning to them 1 to 2% largely. So yes, you would expect that participation in that space will drop significantly.
But how?
That's what I think has been the.
All right, I was just going to ask, how low do you think the compression of yields can go in the markets this year?
Okay. You and your team members always ask this question. If it was something that we all knew, it would be easy to do this job. But I think that it's always a difficult call. To be honest, the CBN and the GMO will look to, raise funds at low a rate as possible. All right, and then it's a call that is difficult to make. I'm sure at the levels where we are right now, it was not a level that was easy for anyone to have called. The question is 5%, an expected target? anything is possible in a COVID year. So it's not something that you can place your hands on right now. And I'm sure, and I think also, don't let me say I'm sure, and I think also for the issue as CBN and DMO now, we will keep pushing the needle to see how far the market can take it. And it's anybody's guess where this goes.
All right, Mr. Odutala, we'll be getting back to you in just moments. We need to just touch your audio a bit there. But as we wait to get that fixed, let's take some headlines now. During the week, the federal government said it will avoid issuing Eurobonds due to the expense and is looking at alternative ways to raise funds to support the economy. According to the Vice President, Yemi Osinbajo, the Eurobond market is not a feasible option for the government owing to its commercialization. Now, he adds that the federal government is looking at the $1.5 billion World Bank facility rather than Eurobonds, despite the delay by the lender. And in other headlines, Union Bank has notified the Nigerian Stock Exchange that it has secured a $40 million finance guarantee facility from the International Finance Corporation to help boost access to finance for local businesses. The bank explains that the funds will help establish working partnerships with 300 major international banks within the Global Trade Finance Program network, thereby reducing cash collateral requirements for the Nigerian businesses. The facility will enable the continued flow of trade credit into the Nigerian market at a time when imports are critical and the country's exports can generate much needed foreign exchange. Now, Transcorp Hotels has made some changes to its board of directors. During the week, the company notified the NSE and stakeholders that it accepted the resignation of Mr. Adim Jibono as a non-executive director of Transcorp Hotels with effect from October the 14th, 2020. Transcorp also announced the appointment of Mrs. Helen Iwuchukwu as a non-executive director of the hotel with effect from October the 21st, 2020. Now, prior to this appointment, Mrs. Helen Iwuchukwu was the executive director and the chief operating officer of Transcorp Hotels. And more news now. Adova PLC has joined the league of companies that have leveraged the Nigerian Stock Exchange Facts Behind the Figures platform to engage with the capital market stakeholders. During the virtual event, the Executive Director, Finance and Risk Management at the company, Mr. Moshood Olajide, noted that the company's gross margin grew significantly in the second quarter to 7.3% from 5.4% the previous quarter. Shareholders' funds also grew by 5.8% to 17.5 billion naira in the half year of 2020, and that's a result of an 11.5% growth in retained earnings. Gearing ratio also improved to 37.8% in the first half of 2020, while earnings generating capacity remained sufficient to cover existing debt with normalized interest cover. An SFS Real Estate Investment Trust Fund has released its earnings for the period ended September the 30th, 2020, showing a higher net income of 140.5 million naira. Figures sent to the Nigerian Stock Exchange shows that the total income for the period rose to 188.91 million naira, while admin and other expenses increased to 48.4 million naira. Total assets came in at 2.74 billion naira, while total current liabilities stood at 503.36 million naira. Basic earnings per unit was higher at 7 naira 3 kobo. Meanwhile, Ecobank Transnational Incorporated, the parent company of Ecobank Group, has notified the Nigerian Stock Exchange that it's currently auditing the 2020 third quarter financial results of the group for the period ended September the 30th, 2020. According to a statement sent to the exchange, the audited financials for the third quarter of 2020 will be released on or before November the 29th, 2020. This notice is in line with provisions of Section 113 of the Rules for Filing of Accounts and Treatment of Default Filing Rule Book of the Nigerian Stock Exchange. Now we have Tony Odutola, the Deputy Head of Investments at ICO Pensions, still with us to talk more about the Nigerian debt market. Thank you, Mr. Odutola, for sticking around. Now, let's continue the conversation now. In the event that the DMO is finding it difficult to raise interest rates, what would be the reactions of dealers?
Okay, well, the DMO doesn't have the function to raise rates. I mean, its function is to borrow on behalf of the government. I mean, that function is for the CBN. And to be honest, they are happy to keep rates as low as possible because, of course, they need funding for the expansionary stance that the government has taken. And as per reaction of dealers, I mean, not much can be done. You have funds at your disposal that you have to put to use. So the only available instrument that you have is, what you'll have to put it, into, except, of course, you have other sources that you want to deploy funds to.
But with the external reserves holding steady in September at $35.74 billion, despite the resumed FX sale by the central bank, what happens to FPIs who are at risk of and want to repatriate their investments or dividends?
Well, the sale of forex has resumed by the CBN, albeit at a very low volume. If you compare that to the demand funnel, I mean, you have over $1 billion in demand, and then CBN sells a little over hundred of millions of dollars over a certain period. I mean, that of course means that you have quite a bit of people on the sideline. One other thing is that the depressed rate environment also means that you have a bit more foreign players that will be willing to go out now because of course they've made a lot more money. So even what you have on that queue may be more than what it is. But I understand that for the CBN the idea will be to manage this as much as possible because of course they have very limited options open to them to take.
Could this now signal more pressure on the Naira, and do you even see a further adjustment on FX rates?
Like I alluded to, pressure on the Naira, yes, you may have that because of like I said, rates are down, prices are up. It will make sense for any investor to cash out and then move on. So the pressure could be there. In terms of alignment of interest rates, the exchange rate, with the discussion that is to go on with the World Bank, and I think we've seen a few more of those market-driven positions being held by the government now. So we could begin to see, further adjustments in, FX rates. That's a possibility, but of course, it's not cast in stone.
Now, let's talk about the impact of COVID-19. Of course, with the pandemic and all the borrowing plans, an inevitable economic recession is in sight. How can Nigerians balance these constraints?
For Nigerians, I'm not sure that what is supposed to be done is something that that has not. If it hasn't been done by now, it may be a difficult one because to respond to it will mean that you've got some emergency funds. You've been able to to establish a budget, pay down your debt, be more frugal in your lifestyle. Things that are really important are the things that you do. Maybe if you like, diversify your income, diversify your investment, so that the shocks that that you have in the system doesn't take you out because of one investment class that you've been able to get. But largely, I doubt if that's speaking for a generality of the people, because of course it's probably why you have the protests going on at the moment.
Generally now, what's your outlook for the markets in the final quarter of the year from the PFA's perspective?
Outlook, I would still expect a depressed fixed income yield environment, a bullish or worst case scenario, flattish from where we are, equities market. So you would expect a bit more risk, would be taken. However, I mean, I would caution that a high level of due diligence will need to be had by whoever is investing, because I mean, the more risk that you take, the more return that you expect. But not everything that is attractive is desirable at this point. So basically, depressed yield environment, increased return on equities investment will probably be what I would expect.
Now, just before I let you go, Mr. Odutola, I'd like to get your review of the market performance for the week. It would appear that the bond market was mostly bullish while the NT bills market was mixed. Any idea why that happened?
Okay, in the course of our discussion, we had, talked a little bit about this. If you have returns nearing zero in the NTBs market, and you have some bits of higher yields in the bond market, it will be expected that if you must do fixed income, you would rather make that move. But I could argue again that in the long run, will that be your best bet? I mean, that's another discussion to be had, because at some point in time, something will have to give truly. When is a question that we'll have to ask. But if you must stay in the fixed income space, then it probably make a bit more sense that you will see more activities in the bond market, which is why it is bullish, compared to the T-bills market.
We'd like to thank you, Deputy Head of Investments at ICO Pensions, Tony Odutola. Thank you for sharing some of your time with us this evening. And just before we go, let's just do a recap of some of the headlines we brought you earlier on. We told you that Adova PLC has joined the League of Companies that have leveraged the Nigerian Stock Exchange Facts Behind the Figures platform to engage with capital markets stakeholders. During the virtual event, the Executive Director, Finance and Risk Management at Adova, Mr. Moshood Olajide, noted that the company's gross margin grew significantly in the second quarter to 7.3% from 5.4% the previous quarter. Shareholders' funds also grew by 5.8% to 17.5 billion naira in the first half of 2020, a result of an 11.5% growth in retained earnings. Our gearing ratio also improved to 37.8% in the first half of 2020, and earnings generating capacity remained sufficient to cover existing debt with normalized interest cover. We also mentioned to you that SFS Real Estate Investment Trust Fund has released its earnings for the period ended September the 30th, 2020, showing a higher net income of 140.5 million naira. Figures sent to the Nigerian Stock Exchange show that total income for the period rose to 188.91 million naira, while admin and other expenses increased to 48.4 million naira. Total assets came in at 2.74 billion naira, while total current liabilities stood at 503.36 million naira. Basic earnings per unit was higher at 7 naira 3 kobo. Well, let's just take one last headline, and that's coming from Ecobank Transnational Incorporated. That's the parent company of the Ecobank Group, which has notified the Nigerian Stock Exchange that it's currently auditing the 2020 third quarter financial results of the group for the period ended September the 30th, 2020. According to a statement sent to the exchange, the audited financials for the third quarter of 2020 will be released on or before November the 29th. This notice is in line with provisions of the rules for filing of accounts and treatment of default filing rulebook of the Nigerian Stock Exchange. And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.